Swayam Prabha. Digital India. Educated India.
Yoga Karmasu Kaushalam.
Friend, Namaskar. My name is Dr. S.C. Sardar, retired professor, SD School of Commerce, Gujarat University. Now friends, in the continuation of preparation of final accounts, today we will see part 7. In part 6, we have studied about adjustments on provision for discount on debtors, manager's commission, interest on capital, goods withdrawn for personal use, goods distributed among staff for their welfare, abnormal loss of material. Now friends, in this part 7, we will study final accounts with inclusion of different types of studied adjustments. Now friends, let us start with the illustration on preparation of final accounts, which includes adjustments. Illustration number 4, we are given the trial balance of Pares as at 31st March 2025. So particulars, debit balances and credit balances. Friends, first item which is given to us, that is cash in hand. It would appear in the balance sheet at asset side. Cash at bank 26,300, again it is asset, would appear in the balance sheet asset side. Purchases, that is 4,06,750, it is our purchase of raw material, so it would appear at the debit side of trading account. Then we are given returns outward of rupees 5,000, this is our purchase return, will be deducted from our purchases. Then we are given sales of rupees 9,87,800, it would appear at the credit side of our trading account. Then we are having return inward, that is 6,800, this is our sales return, will be deducted from our sales. Now friends, be careful wherever the items are highlighted with the green line, that this covers the adjustment. So here wages are given to us of rupees 1,04,800, we are having one adjustment on it that we will see subsequently. So wages would appear at the debit side of trading account. Then fuel and power 47,300, again it is item of trading account debit side. Carriages on sales, be careful, carriages on sales, that is the expense of profit and loss account 32,000 would appear debit side of profit and loss account. Then friends, we are given carriages on purchases 20,400, this is our inward expenses, so it would appear at the debit side of our trading account. Then we are having stock on 1st April, that is our opening stock 2024 57,600, it would appear at the debit side of our trading account. Then we are having building 3 lakh rupees, on that we are having adjustment, and this building would appear in the balance sheet at asset side. Then we are having freehold land of rupees 1 lakh would appear in the balance sheet asset side. Machinery also we are having of rupees 2 lakh, and for that we are having adjustment, and it would appear in the balance sheet at asset side. Then salary, that is our expense, and having adjustment would appear at the debit side of profit and loss account. Patents we are having of rupees 75,000, this is also our asset and would appear in the balance sheet at asset side, and adjustment is to be taken into account on that. Then we are having general expenses of rupees 30,000, this is an item of our profit and loss account debit side. Insurance here 6,000 rupees, having one adjustment, it is an expense, it is a revenue expense, so it would appear debit side of profit and loss account. Friends, capital we are having 7,10,000 in the balance sheet liability side. Drawings 52,450 will be deducted from our capital in the balance sheet. Then we are having debtors of rupees 1,45,000 and having adjustment on it, that we will see subsequently. Sundry credits are given to us, 63,000 would appear in the balance sheet at asset side. Friends, here Be careful, input CGST is given to us 12,500, input SGST is given 12,500 and output IGST is given to us 25,000. So, here we have to set off of this input GST against output IGST, but that is to be offset according to the given order. So, total of trial balance is we are having, that is 17,90,800. Now, you are asked to prepare trading account and profit and loss account for the year ending on 31st March 2025 and balance sheet as on that day after considering the given adjustment. Now, friends, here what happened, along with the questions you are given adjustment and line by line all adjustments are explained to you people. Here we are having stock at a cost on 31st March 2025, that is rupees 68,000 rupees. Let us see the explanation of it. The closing stock is our unsold goods. No information is given for its market value and book value, that is cost price. Thus, given amount of rupees 68,000 is recorded. This would appear credit side of trading account and asset side of balance sheet. Friends, then we are having machinery, and machinery is to be depreciated by 10% and patents are to be depreciated by 20%. Let us see explanation. Depreciation is non-cash revenue expense, and from machinery of rupees 2 lakh, 10% of this value, that is rupees 20,000 is deducted and this 20,000 is debited to profit and loss account, and net value of machinery is rupees 1,80,000 is disclosed in the balance sheet in asset side. The second item is, that is about patent. We are given patent of rupees 75,000 and 20% of this value rupees 15,000 is deducted and this 15,000 is debited to profit and loss account, and net value of patent rupees 60,000 is disclosed in balance sheet asset side. Friends, third adjustments we are having for salary. Salaries for the month of March 2025 of rupees 15,000 were unpaid. This is unpaid salary is a expense of current year and it is not recorded, so it is added to salary of current year rupees 50,000, but it is unpaid on 31st March 2025 and is treated as liability and would appear in balance sheet liabilities side. Second point is, that is insurance included a premium rupees 850 for the next year. It is wrongly recorded transaction and it is advance payment, so rupees 850 is deducted from insurance expense from debit side of P&L account and is appeared in the balance sheet asset side as a prepaid insurance. The next is very interesting, friends, say this: wages include rupees 20,000 spent on constructing a shed for employee and visitors. It is a wrongly recorded transaction, thus from wages rupees 20,000 is deducted from the debit side of trading account, and second defect is added in the value of building because it is an expense related to building. Then friends, we are having adjustment number 6 regarding provision for doubtful debts, that is BDR, and that is to be created to the extent of 5% on sundry debtors. Friends, it is a provision for probable loss. We have balance of debtors of rupees 1,45,000 and 5% on it is to be provided, and that comes to rupees 7,250. Thus, rupees 7,250 is debited to profit and loss account and deducted from debtors in the balance sheet in asset side. Now, friends, be careful. This is very important point regarding setup of GST. Students, you are suggested to refer part 2 of preparation of final accounts for recollection of order of setup of GST. Friends, let us see the explanation of it. Here we are having output IGST. It means we have collected from our customer 25,000, but that is from interstate sales, and here we do not have any input IGST, means interstate purchasing. So, entire 25,000 balance we will have and will be utilized according to the order. So, according to the order, the first to be deducted input IGST, but we do not have it. So, we have not deducted it. Then after, if you have any input CGST paid, that is to be deducted. Yes, we do have 12,500. So, we will deduct 12,500. Now, remaining balance is 12,500, and according to the order, the last you can deduct from the balance input as GST if any. Yes, we do have of rupees 12,500. So, we will deduct it 12,500. So, ultimately what will happen, the balance of output i.e. GST is fully utilized. So, balance is 0. Now, friends, let us see trading account of Paresh for the year ended on 31st March 2025. First of all, we see all items of debit side. We have opening stock of 57,600. We are given purchases of rupees 4,06,750, but from that returns outward 5,000 are to be deducted. So, net purchase comes to 4,01,750. We have wages 1,04,800, but we have wrongly recorded and we have spent for shed, that is to be deducted from here. So, that comes to 84,800. Then we are having fuel and power 47,300. To carriages on purchase is 20,400. Now, friends, here what happened, the total of credit side is a greater than total of debit side. That is why difference is appeared at the debit side, rupees 4,37,150. So, now we will see the items of credit side. We have sales of 9,87,800, and from that we have to reduce returns inward 6,800. So, net sales of the current year is 9,81,000 rupees, and next item is closing stock, that is 68,000 rupees. So, total of the trading account comes to 10,49,000, 10,49,000, and finally, the gross profit we will transfer to the profit and loss account credit side, that is 4,37,150. Now, friends, we do not have any item credit side of profit and loss account. Only one item we have, and that is only gross profit which we have transferred from our trading account. So, now let us see the items of debit side of profit and loss account. The first item is given to us to carriages on sales, that is 32,000. Then, friends, salary we have 1,50,000 and outstanding salary, that is 15,000. Whatever numbers are written in the bracket, that shows the number of adjustment. So, you see the adjustment number 3 where you are given outstanding salary is 15,000. So, that comes to 1,65,000. To general expenses, yes, 30,000 rupees we have. We have paid insurance of 6,000, and you refer your adjustment number 4 where we are given prepaid insurance 850. So, expense of the current year comes to 5,150 rupees. Then we have to see the depreciation on different assets. You refer your adjustment number 2 where you are given this information. On machinery at the rate of 10% and on patent at the rate of 20%, we have calculated depreciation rupees 20,000 and 15,000 respectively. So, total depreciation comes to 35,000. Then, friends, we are given the provision for doubtful debt 7,250, and now here the total of credit side of profit and loss account is greater than the total of debit side, and therefore, difference is appear at the debit side, that is 1,62,750, and that is our net profit. And now, this net profit we will transfer to the balance sheet. Now, so in the balance sheet, friends, we are having capital of rupees 7,10,000, and in this we will add our net profit of rupees 1,62,750. So, total capital comes to 8,72,750, but from that the whatever drawings are done by the owner, to that extent we have to reduce the capital. So, 52,450 to be deducted from it, and net capital at the end of the year of the owner is 8,20,300. We do have creditors of 63,000. So, we have written it. We have outstanding salaries of rupees 15,000, refer your adjustment number 3, and total if you want to see, it must be equal 8,98,300. Now, let us see the asset side. We are having building of rupees 3 lakh, and we have deducted this 20,000 rupees from our wages, but it is spent for this. So, it is to be added over here. So, 20,000 are added over here. So, that comes to 3,20,000. We have freehold land, that is our asset 1 lakh rupees. Machinery, refer adjustment number 2, we have of rupees 2 lakh and depreciation we have calculated 20,000 at the rate of 10%. So, net amount appeared, that is 1,80,000. Then patents are given to us of 75,000, refer your adjustment number 2, we have deducted depreciation of 15,000 at the rate of 20%, the net amount comes to 60,000. Then we are having debtors of 1,45,000, from that BDR is we have provided, that is 7,250. So, that comes to 1,37,750. Then after we are having prepaid insurance, refer your adjustment number 4, 850. Closing stock, adjustment number 1, you refer that 68,000 rupees, cash in hand 5,400, cash at bank 26,300. So, total is 8,98,300. So, both the sides are similar, it means our balance sheet is correct. Now, let us see illustration number 5. We will see certain new items over here. From the given trial balance of monies as at 31st March 2025, you are asked to prepare trading account, profit and loss account and balance sheet. First of all, we will deal with the items of debit side. Friends, kindly note over here the items which are highlighted with the green color, that covers effect of adjustments. Now, first item is opening stock, would appear debit side of trading account 31,000, land and building 70,000 in the balance sheet asset side, machinery 1 lakh in the balance sheet asset side, furniture and fixtures 10,000 rupees in the balance sheet asset side, purchase is 2,12,000 rupees debit side of trading account, salary is 22,000 rupees our expense, revenue expense, debit side of profit and loss account, general expense is 5,000 rupees debit side of profit and loss account, rent is 6,000 rupees debit side of profit and loss account, postage expense is 2,800 debit side of profit and loss account, stationery 2,600 debit side of profit and loss account. Then we are having wages 52,000, it is an item of trading account debit side of trading account. Freight on purchases, that is also item of trading account debit side. Carriages on sales, that is the item of profit and loss account, it is our expense 8,000 rupees. Then we are having repairs 9,000 rupees, that is the item of debit side of profit and loss account. Sundry debtors, that is our current assets, would appear in the balance sheet asset side. Bad debts 1,200, it is our loss, would appear debit side of profit and loss account. Cash in hand, that is 8,200, that is our current assets, would appear in the balance sheet asset side. Cash at bank 12,800, that is also our current assets, would appear in the balance sheet asset side. Then we are having sales return 10,200 rupees will be deducted from our sales. Then friends, we have already paid input IGST 4,000, input CGST of 4,000 rupees and input SGST 4,000 rupees. Right. So, here total is 6,40,400 rupees of debit side. Now, let us see credit balances. The first item is capital 1,20,000, loan from Khyati at the rate of 9% per annum 60,000 rupees, sundry creditors 19,200, purchase returns 4,200 to be reduced from our purchases, sales to be shown credit side of trading account 4,14,600. This discount we have received 2,400, it is an item of profit and loss account credit side, and output IGST is given to us of rupees 20,000. So, total of trial balance of the both sides, that is 6,40,400. Now, friends, we will see all adjustments one by one and simultaneously we will see the explanation of them too. Here the first is wages for March 2025 amounting to rupees 4,200 have not yet been paid. So, it is our outstanding expense. This is unpaid wages is an expense of current year and it is not recorded. So, it is added to wages of current year rupees 4,200. It is unpaid on 31st March 2025, thus it is treated as liability and is appeared in the balance sheet liabilities side. The second item is general expenses include insurance premium of rupees 1,200 paid in advance for the next year. So, here there are two things, it is general expense, in that 1,200 is included a premium and again it is advance payment. So, this is wrongly recorded transaction. Thus, rupees 1200 is deducted from general expenses of rupees 5000. At the same time, insurance premium is paid for the next year. Thus, it is shown asset side of balance sheet as prepaid insurance rupees 1200. The next point is provision for doubtful debts at the rate of 5% on sundry debtors is to be made. Here we have debtors of rupees 60,000. So, 5% on 60,000 is to be made, that comes to rupees 3,000. This is provision of current year. Thus, it is appeared at the debit side of P&L account, and to that extent amount of debtors is reduced. Then we are having depreciation to be charged on land and building at 2%, machinery at the rate of 10% and furniture and fixtures at the rate of 15%. From these assets, applicable depreciation is deducted and the amount of depreciation is debited to profit and loss account as an expense of current year. After deduction of depreciation, net balances of respective asset is disclosed asset side of balance sheet. Now friends, loan from Khyati was taken on 1st October 2024 and interest has not yet been paid. This is our implied adjustment. This is our hidden adjustment. So, this adjustment we have to correct it and we have to pass the journal entry for that, some accounting treatment to be done for this. This is hidden adjustment because no information is given in trial balance about interest on loan. Further, loan is obtained on 1/10/2024 at 9% and for the period from 1/10/2024 to 31st March 2025 is outstanding. This interest comes to rupees 2,700. It is expense of current year, hence debited to profit and loss account. It is unpaid, so disclosed liability side of the balance sheet. Then friends, we have value of stock at hand on 31st 2025 was rupees 29,800. The closing stock is our unsold goods. No information is given its market value and book value, cost price. Thus, given amount of rupees 29,800 is recorded. This would appear credit side of trading account and asset side of balance sheet. Then after friends, manager is entitled to a commission of 10% of the profit after charging the commission. Profit before charging the commission is 62,000. Commission payable is at the rate of 10% of net profit after charging such commission. So, to calculate the manager's commission, we have to apply this formula, net profit into percentage of commission plus percentage that is to be taken into account, and it is to be divided by 100 plus percentage of commission. Now, rupees 62,000 into 10 divided by 110, that comes to rupees 5,636. So, after deduction of commission is rupees 56,364 and 10% of that amount is 5,636. So, here it is confirmation of commission which is to be paid to the manager. Friends, now let us see setup of GST. We have output IGST, it means we have sold goods and on that we have collected rupees 20,000 and this is our interstate sales. First of all, from this 20,000 rupees, we have to deduct input IGST if any, but we have it, so 4,000 to be deducted from that. So, remaining balance is 60,000. Then after we have to deduct input CGST if we have. Yes, we do have, that is 4,000 rupees to be deducted. So, balance is 12,000 rupees. And finally, as per the order, we can deduct input SGST if any. Yes, we have 4,000 rupees. So, here in our case, we have deducted input IGST, CGST and SGST. Still we have balance of 8,000 rupees. So, balance of output IGST it will appear in our balance sheet and this is our payable amount to the government and that is our liability. Now, we will see our trading account. First, we will see all items of debit side of trading account. First is opening stock 31,000 rupees. Then next item of the debit side is we are given purchase of rupees 2,12,000. From that purchase return is deducted 4,200. So, final balance is 2,07,800. Then we are having freight on purchases 5,600, wages 52,000 and outstanding wages to be added. So, we have added it 4,200, that comes to 56,200. Gross profit we have 1,33,600. It means the total of credit side of trading account is greater than the total of debit side of trading account. Hence, this difference is appear debit side and it is treated as our gross profit. Now, we will see the items of credit side. We have sales of rupees 4,14,600. From that, we will deduct sales return 10,200. So, net sales of the current year comes to 4,04,400. We have closing stock 29,800. Total of trading account of both the side is identical 4,34,200 rupees. Now, the next component which is to be prepared, that is our profit and loss account. Now, we will deal with the items of debit side. The first item is given to us salaries of rupees 22,000, rent 6,000 rupees, postage expenses 2,800, stationery expense 2,600, repairs 9,000, then carriages on sales 8,000. We have one adjustment on general expenses. We are having general expenses of 5,000. From that, prepaid insurance to be deducted 1,200, that comes to 3,800 rupees. Then interest on loan at the rate of 9% per annum, that comes to rupees 2,700 rupees. Then we are having bad debts of rupees 1,200 and the provision of BDR of the current year is to be added in it, and that is rupees 3,000. So, total amount of bad debts and BDR comes to 4,200 rupees. Then after we are having depreciation on different assets, land and building 1,400, machinery 10,000 rupees and furniture and fixtures 1,500. So, total depreciation of the year on different assets comes to 12,900. Friend, the next item is, that is net profit before commission 62,000 rupees. So, and total of profit and loss account, that comes to 1,36,000, and the net profit before commission we will transfer to the credit side to calculate the commission of manager. Let us see the items of credit side. So, here the first item is our gross profit which we have transferred from our trading account, that is 1,33,600, and during the current year we have received discount of rupees 2,400. So, here 1,36,000 rupees is a similar balance of the both side. Friends, our net profit before commission comes to 62,000 rupees. In our adjustment explanation, we have calculated commission of manager 5,636. Therefore, final amount of net profit which we will transfer to the capital of the owner, that comes to 56,364. Now, we will prepare the balance sheet of monies as at 31st March 2025. First of all, we will see the all items of liabilities side. First, we will see capital. Opening capital is given to us 1,20,000 rupees. Profit which we have earned during the year, that is 56,364. We do not have any drawing. Therefore, we will write the net amount, that is 1,76,364. Then we are having loan of Khyati, that is 60,000 rupees. We had hidden adjustment on it. We have calculated interest on it, and that comes to rupees 2,700. So, total amount payable to Khyati for his loan including interest 62,700. Then we will see the current liabilities. We have sundry creditors of 19,200, outstanding wages 4,200, output IGST 8,000. Kindly you refer your adjustment explanation, and then commission which is yet to be paid to the managers, that is 5,636. Now, we will see the items of our asset side. The first item is about fixed assets, furniture and fixtures. We are having 10,000. On that, we have calculated depreciation 1,500, that comes to 8,500. We do have machinery 1 lakh rupees, depreciation on it 10,000, net figure 90,000 which we have disclosed. Then we are having land and building 70,000, from that depreciation to be deducted 1,400. So, 68,600 is the net amount after depreciation of land and building. Then we will deal with the current assets, cash in hand 8,200, cash at bank 12,800, sundry debtors 60,000. We have provided BDR on it 3,000 rupees to be deducted from it. So, 57,000 rupees is the net balance. Then we are having closing stock 29,800 and prepaid insurance 1,200. So, total comes to 2,76,100 rupees. Now friends, summary of this part 7. In this part, we have studied two illustrations on preparation of final accounts. These illustrations have covered understanding of setup of GST. Then after we have studied adjustment pertaining to closing stock, unpaid expenses, wrongly recorded transaction, prepaid expenses, computation of depreciation, computation manager's commission, hidden adjustment on loan interest, BDR are also discussed with the accounting effect and their disclosure. Students, you are suggested to spare required time for revision of this unit and acquire good command on this unit, that is final accounts of sole proprietary concern. We will meet soon with some other illustrations. Thank you.